Howdy ho, everyone, and welcome aboard. Happy new week to you, wherever you may be in God's green garden on this, Monday, the 22nd of August. I'm pleased you could join us, and let's dive straight in, shall we, and see what we can find for us to perhaps trade today and make some money. First up, we won't look at the Forex factory. Okay, we will. I'm sure Ash will do this in detail a little bit later. Bit of red news tomorrow. Nothing happening today. Ash will go through this a little bit later, so let's wait till he joins us. Let's talk about the pound versus the US dollar and the latest mode of trading this London Open session, which is very much in range. You could certainly say we're in range today, no question there. What we're attempting to do is to get a system that actually works consistently to trade this Open of London session using the pound versus the US dollar. And thus far, having probably just zero flat results on this latest system, which on Thursday, as you can see, we ended long here. We get our first take profit, and then, of course, the daily pivot did what the daily pivot does best, and that is repel price action, and away she went. So we were trading in the wrong direction there, as it turns out, but break-even trade at the end of the day. Today, we are below the center line, and so I've got time to explain for those of you who are new. Welcome to you, by the way. If you're new into the room, nice to have you on board. The basis of this trade, which is untested, I'll say that from the outset so that you don't go putting lots of money on the table if you wanted to trade this. We are picking the range of, what's that name, that place? Tokyo Open to current. So the range in that particular session thus far is low here, high here, and we mark the center line. Wherever we are in relation to that center line at London Open, we choose to trade in the opposite direction. So if we're underneath the center line, we buy at the center line, take our first profit here, and put our stop loss here. If we're above that line, we do exactly the reverse. We go short at that line, put our take profit here, and our stop loss there. Our first take profit, that is, not our ultimate, which is 2.5 times risk is where we exit the trade. All right, looks like we're going to be going long here at this point. I'll just blow that up a little bit. It is certainly a tight range, without question. I think it measured, what, 37, 12, or 32 pips, so we're 16 pips above the stop loss, which is at 118.05. So the entry level will be 11821. Might as well set that up on the trade manager. As I said, please do not risk any meaningful money on this. This is purely testing. And we're going to go with 1.1821. We're going to have a stop loss, which is this line at 1.1805. And our first take profit will be at, this is a bit of a misnomer, we're actually not going to take any profit. We're just going to move our stops to entry at that point. And that level will be 1.1837, which will mean nothing off the table and stop to entry. Rightio, it's a buy. All right, that looks set. That may not take long to fill, one would suspect, given the tightness of that range. But I'll come back to it directly. Firstly, let's go to where? Updates.
Oh, mate. Sorry, buddy.
Hello, mate.
There is a trade on the FTSE.
Hang on. Ding, 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 ding. Trade alert.
Trade alert. It's very short.
What do you got, mate? Short. Wow, everything looks to be going that way, does it not?
Yeah, it certainly does, mate. Let me bring in. Oh gosh. Let's do.
George told us last Monday everything was going to go down. He was right.
Yeah, it looks like it is going to do it today too. So let me just do that and do that. Okay, now where are we at? This we need, this we need. Just making sure I can share my screen. We need, that we need. Now we need the market to follow through here, but the good thing is that it is pausing just long enough for us to get in by the looks of things. So we are there. What one is that? And that. Okay, there we go. So it is, yeah, as I say, it is for a short on the FTSE, and it looks to me like there's this weekly pivot. I've got another limit order in here. I've actually gone live here as well for the short, but I've taken on a couple of positions here just to see if we can get short with any kind of meaningful number. But this is the real area here. So it looks like around about 5 pips away from where we are now. And if you look at this level, then obviously you got the weekly pivot there. But obviously, but also there's this trend line along here, which suggests maybe it tips a little bit higher. If we go to the lowest point of that trend line, looks like a little gap down there. So look, this area is the area for the shorts here. So we're looking there, and we are looking for one other thing. Now, what was it? I'll tell you what it was. It was last week's range. If you look at so here's the weekly pivot here. So if I pull in this low point here and go to the high point here, that's going to give me the range for last week. So from this point here down to this point here. So if I pull the fib up here, and I'm going to change it to the same color as the pivot there. Then I'm going to change this to the same color as the pivot as well. Whoops. I tend to try and keep my color coding the same, so red, white, and blue if it's a weekly number. So you can see here that there's the 38% retracement as well from last week. So we're just below that particular area on the 31% retracement. We've just bounced off the 50% retracement, but because we're below this area, it looks like a pretty good area for a short. So I'm just kind of adding into the position really down here. Target down here looks around about right at 74.75. Now, if you bring that target up and why that is the target down there, a little bit of price action there, but we can pull up the trend line along here as well. Might be that we need to have in play. This trend line here would suggest, actually, if we were to break this down, it could be quite significant. So it could be quite a significant break to the downside with the FTSE. So yeah, market is a little bit weak now. The key could be that we're seeing Shell and BP actually. Oh, just going to pull my. Here we go. We're seeing Shell and BP move to the downside. Now, there's been sort of some grappling really with the FTSE 100 with the oil stocks, and the reason for that is that there was still some assumed growth, I think, from those particular areas, and maybe recession concerns were sort of starting to dissipate just a little bit. But with recession concerns coming back into play, the downside looks on. There is one other way that I would play this, and I did consider this, and that was to trade the FTSE long and the Nasdaq short, and that is still a possibility because the FTSE has held on so well. But the reason I've decided to go short with the FTSE this morning was purely because Shell and BP look like they are both coming down. And I see a little bit of upside movement with the likes of Glencore and Rio Tinto, but if the recession concerns really start to filter through, then you'd probably start to see those guys turn around as well. So so that's the reason for the short position. And not aiming for too much. I mean, if you bring up the daily charts, if we removed some of these lines, then you'd see that there is some support down here as well. So not looking for that much. This area up here is the big concern. So you've kind of got enough, and make sure you got enough in your tank to protect that area. So maybe stops above here and then going short in again here would be an option, or just making sure that there's just enough room between entry and this particular area here, because as I say, the FTSE's been relatively keen to continue to move to the upside. And if we compare that to the NASDAQ we talked about before, about having the room if it did start to break down. Looks like it may well be doing that. There's the trend line along here that that the NASDAQ had taken out. Now, I don't know whether we would consider that as a genuine break just yet or not, and good to get your opinion on that, maybe because you were looking at this as well, or whether this is still just about a hold with the NASDAQ. Jackson Hole is this week, I think Wednesday or possibly Thursday. What's the date today? 22nd. So Jackson Hole, I think, is on Thursday. So that would probably give us more of an indication of where the central banks are looking. And you know, we've seen some pretty good, decent boosts in the dollar recently. So heat map is for the CAD. Yes, it is, mate. Yeah. Yeah, the Canadian, yeah, and which is a tricky one to kind of think about, but yeah. So this week we're looking at just replying to Gary. Gary's sort of saying about the heat map. The heat map, I don't think it marks the yen down that badly. So you could still go with the yen, quite probably. But the heat map is sort of is churning out Aussie short and CAD long. So an Aussie CAD short, effectively. Sorry. So Aussie CAD short is on the heat map. Whether that transpires, I don't know.
What heat map are you using?
Oh, my own, the one that I build with the fundamentals and a cot on the seasonals. They are sort of pointing to a Canadian dollar long while the Australian dollar is a short. So so there's a possibility.
I'm on board with that.
You'd be on board with that?
Yep, 100%.
Oh, brilliant. Okay, well, we'll have a look at what you're seeing with the fundamentals. Last week it was for the Aussie yen, but the yen has just come off a little bit, and I think that was more to do with the COT data. COT data was very keen on the CAD this week, and actually really not keen on the CAD. Sorry, on the Aussie or the euro. So the euro still looks like it's in some problems. So maybe even Euro CAD could be something to look at. So Euro CAD for a short. I think that one of the problems with the Euro CAD is the price.
Yeah, absolutely.
We're kind of heading to that triple bottom area. The Aussie CAD, even though it's come down, and it is forming this inverted head and shoulders. So I get the fact that we've got this this potential for some upside. I don't know whether that's on a trend line, not quite. See, so I mean, there's a few bits and pieces that, if you look technically as well on the Aussie CAD, it does actually look like it may well weaken here. Yeah, that looks like, you know, we're under the weekly pivot. There's quite a lot to like about an Aussie CAD short in this particular scenario from what I can see. So so yeah, the heat map does churn that out, Gary, but that's what we're looking at, mate, is Aussie CAD short for the week, and we'll get Jeff's opinion on the technicals of that. But that's what the fundamentals, seasonals, and COT data is saying.
Okay, let's have a look at some currencies then, shall we?
Yeah, let's do that, mate. Yeah.
All right, I'm going to start with updates on last week, and I think you guys hard to remember exactly who's in these trades and who's not, and when I actually took them. But let's update them anyway. We were long pound yen last week on the weekly chart. Well, we didn't actually get long. That was our weekly trade above this bar, stop loss below, did not trigger, and I've no longer got interest in that at the moment, given that neither's anybody else by the look of it. So we'll just leave that one alone. We had Cad Swiss as an order long, and nothing's really changed here on Cad Swiss, to be fair. The only thing, and very, very similar to pound yen, I've got to say, in terms of price action, nothing's happening. We're just going sideways at the rate of knots. And the reason I say nothing's changed is because I still want to go long above that bar. Now, what has changed, if you like, is where I've got my stop loss, because I'm trading this as a weekly game changer. So game changer, for those of you who are not aware, is simply my term for a key reversal bar or candle, if you like. And if you don't know what a key reversal bar or candle is, it is a candle or bar whose high or low is higher or lower, in this case higher than the previous week, and closed on or near its low. The reverse of that, of course, is a candle whose low is lower than the previous week and has closed on or near its high. Now, these are not to be taken out of context, because you do need something to go with that. And the something that I always look for is more a chart pattern, if you like, or a primary trend. Now, the primary trend here seems to have potentially been broken from the downside to the upside. And certainly we're getting monthly higher high, higher low, higher high, potentially a higher low, which has not, if I go a little bit tighter, broken back below that trade, or certainly hasn't closed below that trade line. Given that it's a monthly chart, we've still got a week to go and a little bit. So at the moment, I'm looking at this thinking, okay, it doesn't really want to go below that line. And of course, it's a bounce off the support trade line as well. So I think the direction here is long for now. I don't know how far we're going to go with that, maybe only up to this level, but if we can get something out of it, happy days. As I said last week, we traded that bar, and if you wanted to take that bar on again in terms of where your stop loss is, I just don't see anything wrong with that either. Maybe you could combine the two with putting half your risk with the stop loss there, or even there, and the other half with the weekly bar. But I think the direction for me most definitely is long Cad Swiss this week. The other order I put in this morning was for Euro Aussie long. Now, as I said, when I placed this order, I can't give you a valid reason why on earth the Euro would outpace the Aussie. And it seems at this point in time as though that may be well the case, as the Euro versus the Aussie continues to tank. It is a setup, however, and for that reason, I placed the order. Very much counter trend. If you have a look at the current trend on the weekly chart, it certainly doesn't look to be bullish. But double bottom, you're at the base of this trade line, or trend line as it is. So no reason to think it can't bounce. We've got a clear wedge pattern sitting here, which suggests to me that we're going to oscillate in this area. Certainly that horizontal level looks very much in play. And if that's the case, we've got a strong chance of getting this up to there somewhere. If this plays out as a reversal, then you could even be looking at a level up here somewhere. That's why I'm happy to take the position. I don't know that it's even possible from a fundamental point of view, but I don't deal in fundamentals, I deal in technicals, and the technical chart's telling me that if price goes back to here, it's probably going up to there and maybe even up to there. So that's why I've placed that order. Will I cancel it? Most certainly I will, but not until this low has been taken out. So it's still valid until that low is taken out. So that is Euro Aussie. So they're the two orders that I'll place this morning. In terms of the trades that were in last week, I've closed Euro dollar, maybe prematurely. By the look of the chart, that may well be the case, but my target was actually here. And I forecast, when I say forecast, I broadcast my target as there. And I should have taken profit there. I didn't. I left it to 10020, which is exactly where it is right now. So that trade is closed. if you were in that trade, you should have closed at 100.35. That was just a nice little 1-to-1 as a break and retest of the channel, bottom of that channel. And Aussie dollar still in play. We took this as a false break, trading break, consolidate, back underneath, retest, enter there, stop loss there. I think I might have put the stop loss above the weekly pivot. Don't quite remember. We've taken our first profit here, and this is now a free trade. My targets is in this vicinity. Haven't really mapped it out. Actually, I have set a target of 220 pips, I think, from entry. Risk was, can't remember the risk. I think I might have just traded the bar. So it was about 3-4 to 1, something like that. So it's down around this area. Can't remember. 67.50 maybe is the target area. I may well add to this. If tomorrow this candle looks exactly as it does right now, I'll be placing an order underneath it, maybe underneath that bar, putting a stop loss above the monthly pivot and the current daily high. And if that is the case, I will be adding to this position, going short here, stop loss here, target down here somewhere. That's Aussie dollar. So I think we're up to date with the trades that we were in last week and the new ones. There was nothing else today, apart from the Cad Swiss and Euro Aussie. I had a look at the Aussie Yen, number one. Well, there are 5 game changer bars. We'll quickly slip through those. Aussie Kiwi on the weekly, suggesting that we go long. That's a definite no for me. I won't be trading long that size bar in this vicinity. Rather, I still see this as potential downside with 1, 2, 3 false breaks of resistance. I'm still looking to trade this short. Also have the opinion that when Aussie Kiwi is above 110, it's a sell. When it's at parity, it's a buy. I've been trying to find that for the longest time, but every time it looks like going down, it comes straight back up. So that's testing that theory of mine, and we're now at 111. So yeah, can't find a way short. If I do, I'll certainly scream it, but it's not there at the moment. Cad Swiss came up as a buy. We know about that. We've already traded that one. That is my weekly trade. Cad Yen, again, similar to Aussie Kiwi, too close to the highs for me to trade it. This may well turn out to be the third in that sequence, and if that's the case, we'll look at that down the track. But it's certainly not the worst here, I've got to say. If you do fancy CAD versus the yen, and why wouldn't you? I've got to say it's a strong currency versus a weak currency. Second in 3 weeks of these game changer bars. Interestingly, last week didn't play, or the week before last didn't play out, but this now does look a little bit stronger to me. So it's certainly not the worst trade to take in my humble, and you would get a decent profit in the bank before you had to take it at those highs. So I don't mind it, but I much prefer Cad Swiss because of the position that it sits. Euro pound, look, this is probably one of the toughest crosses at the moment for me to, apart from dollar yen, for me to commentate on, because it's kind of all over the shop. Even if you have a look at the monthly chart, it's been trying to go low. Every time it hits resistance or support, it comes up or down. I can't pick a direction on this one, to be honest. And
yeah, that is a really tricky currency pair to trade. I think there seems to be, more of a race to the bottom rather than which one's stronger. It's really which one's weaker on a week by week basis. We got the leadership contest resolution in a couple of weeks' time, but both economies have been incredibly badly hurt, both by the conflict and it looks like by Brexit as well, and coronavirus. I think it's a difficult one with Brexit because obviously we've seen quite a lot of industry in this country harmed by the fact that there is a lack of workers, that can come and fill the positions that were being filled by some of our European neighbours. But coronavirus really did magnify that particular situation. So I don't know whether when it levels out a little bit that those jobs get filled and industry kind of gets back, or whether Brexit actually is really, going to have some genuine harm. And the reason for that is that some of the visas that have been granted to some of the other countries are starting to now filter through where they weren't before. But because there was lockdown going on, they weren't before.
Yeah.
But now they are. Those industries might be okay again. But they've both been very badly hit by really coronavirus, Brexit, and now the conflict, and also actually droughts. The drought that dried
you're
up
having a bad summer over there, right?
Yes, it's incredibly bad for a lot of industry, and of course you've got winter coming. So yeah, I agree with you, mate. Very difficult currency to kind of split up, that a currency pair to split up that one, and probably one to avoid more than anything else.
Yeah, 100%. I do get the long here because there is a target in place, and I do have a slingshot. I do have a slingshot candle pattern, to be honest. But do I really want to trade it? I mean, that's a monthly chart I'm looking at. Mind you, the weekly is not really giving me anything that I'm liking. So I just easier to move to the next one than it is to trade that. To be fair, this is very similar, of course, to Cad Yen, and same really occurs. I'm trading into resistance as well, and I'm just not interested in doing that. So let's leave it there for now, because I see George has come into the room, and by gee, he got it so wrong last week, telling us that the market was going to sell off. G'day, George.
Good day, guys. How you doing?
Hi, George.
Mate, doing well.
I should learn to keep quiet, right?
Yeah, no, great directional bias last week, and it panned out pretty much exactly as you anticipated that it might. Is there more of the same?
Yeah, I think we're still kind of in that zone. Let me just put up my charts quickly. So this first chart here, S&P 500. So if you look at Friday's candle, now what's interesting about this, while we sold off, we are at the bottom of this bull channel here, and the bulls have created that, obviously, an attempt to break to the upside. Now, for me, as two things I look at: the 10 EMA, which is a thicker EMA here, is what I use to track the strength of a trend. So as long as we're bouncing off that, the bulls were pretty strong, in spite of the macro bearish price action. So what the bears need to do now is to give us a close beneath that channel. If they can do that today, that really would be key. This, let me just take this out. This is it's only 5 minutes. Don't need to see that there. Okay, so what the bears need to do is give us a strong close beneath that EMA, and then of course they have this problem here, this 20 EMA, which, as far as price action is concerned, that's really a respected moving average. So today is going to be quite interesting. For me, I have this bearish macro level in mind, but I'm cognizant of what's going to play out here. Tomorrow I might end up and say, oh, the bears were pretty strong. They gave us a close beneath here, or they gave us, they bounced off the 10 EMA. But how that actually unfolds today, it's one of those days which you have to be super attentive on the 5 minute, but it can be quite exciting because you can have, like, setting up here. This is a potential low that can reverse, the trading range of the Asian section. But if we do get that long, which I'm presently looking out for, so 3 pushes down, 1, 2, 3. I want to see if we get a higher low anyway in that zone. Let's do this. See if we get any higher low somewhere in here. All the bulls would need to do is to get up here, test the low of Friday, and then try and get up into the zone. So If I take a long here, I'm going to be watching this to see if we create a trading range or get above it and maybe start to go all the way up. Bear in mind, again, going up means we're just going back into that bull channel that we saw on the daily. If the bears are strong, then they really need to break beneath this pattern that the bulls are setting up. Give us a couple of strong candles, and I'm not going to jump into that until we come back and look at a retest and see how strong they are. So double-minded at the present moment, looking for opportunities either way. Should the bulls come off this low here, give us a pattern and get up here, and then we get the bears coming in with the lower high 2-bar reversal, then it becomes more exciting to see how far the bears will go. Then they'll be looking to do a measured move, which could take us all the way down to this 4.18 level. UK 100. Again, now this probably illustrates this double-minded position of mine at the moment quite clearly. We are in a bull channel. You can see every time we go to the bottom, this buying off at the bottom. But still, these dominant forces here, the bear forces, are in play. But if you drill it down today, what I'm looking for is for the bulls to come back and give us another tail or bounce off the 10 or the channel, get up here. And if in the day we get the reversal up here, then I'll get out of the longs and still look to sell. So let's go down to the 5 minutes. I mean, if you look down here, or rather go down to the 5 minute, that's the low of Friday. And, we've just really opened up. These bulls that created this need to be satisfied at some point during the day. So whether we come back and do a double bottom here, then I'm definitely going to jump into it and see if the bulls can take us all the way up there. If the bears are going to control the market, then they're going to defend the earlier high of today, high of the Asian session. But they need to smash through here. I'm not going to sell anything coming down here. I would love to see a strong break beneath here and then a pullback to test that. Now, I took a couple of trades on Hang Seng 50, one trade on Hang Seng 50 and one on German 13. I'll talk about that briefly and then I will be done. Now, for Hang Seng, let's go on the 5 minute and I can talk about that trade. So I came into the market. One of my aspirations, I get up early Tuesday, Wednesday, Thursday, and Friday and trade this market from the open. But one of my goals is to do that on a Monday. But the sins and the evils of the weekend always prevent me from getting up early on a Monday. But anyway, so
from you feeling your sins and weaknesses would be far lesser than my own. So you've got no excuse at all.
I'll keep that in mind. I'll work hard next week and see if I can get it.
Cheers, mate.
But I got in here, and this was that's a bit of a classic one: double top, breakout on the open of that second session, pullback, 2-bar reversal. So I took a trade here, stop up here, and my intention, what I was looking out for, was for the bears to break beneath this low, give us a follow through and test, and then maybe add on to. But at that failure, that was a bit of a problem for me because we still have the bulls, they haven't come up so far. So I got concerned there, waited one more candle, got this reversal, then I got out of that trade. So I mean, small bits and bobs, but still a good trade. So it's kind of trickling down, but I'm not seeing where else I could have jumped in here. So I'm gonna wait. If I get a strong bear candle, one of those, a candle like this, okay, that breaks beneath this whole pattern and the pullback, then I can continue coming in. German 30, what I've done with that, which is quite interesting, is I put it on the 15-minute. I took a trade here. Now it's one of those trades which is a near perfect setup, breakout, pull back, 2-bar reversal, inside candle, but it's got a problem because you're selling straight into the low of the Asian session, so low probability trade. So, I just risk sized it appropriately and put a tight stop there. So that went well. I was hoping to get a break beneath the low of 10th of August, which we did. Bit of a tail. The measured move of this trading range is here. Then we got that pullback, and when I got a bull candle, I got out just above here. So probably should have hung a little bit, but I was comfortable to get out because I wanted to see the follow through on this candle. Then, of course, this is all the opening pattern. So, I mean, even if I'd held on to it, I would have been stopped out because my stop was there. So now, my present thought with German 30 is this is good candle. See if we get a strong follow-through candle. In other words, any size candle by closing on here, it's low. Then I'm going to look for a pullback to trade. Any pullback to trade short, whether it's a test of that or if the 20 EMA has come down and go in short. Now, if you look on the daily, this is one market. I mean, there's a couple of others I won't look at. One market that is closed on Friday beneath the 20 EMAs, where they closed beneath the 10 EMA, which broke the strength of that bull channel, closed beneath the 20, and already today we've kind of broken through that low. So will we continue to accelerate? Higher probability that there will be some form of a pullback, and then we can continue to sell off. That's kind of my present.
This was one of my favorite shorts when I was looking over the weekend. I think the ECB have come out and said about raising interest rates and combating inflation. And obviously the situation with the Rhine as well. It's just the problems in Germany and the economy in Germany are compounding. And at the same time, you've got a central bank that are talking about choking liquidity and choking the supply of money. So I think that out of all the shorts in Europe, I think this one was the one that I was leaning towards.
Right. I mean, this and the fundamentals you've got are confirming what was playing out here.
Yeah.
So now it's just a matter of when the nice best setup is going to come up. So I mean, I've got that on the 15-minute time frame. So 10 more minutes, 12 more minutes to go. Then just wait for the pullback. I mean, if you get any pullback, stop is up here, and hopefully you can just keep on building positions as the day unfolds.
Mate,
yeah, it looks like a down session, doesn't it? Sorry, Jeff.
You're right, mate. Mate,
just saying, it looks like a down session. We've got pretty much nothing from what I can see when it comes down to news and data today. There's not a whole bunch, it really sort of kicks in tomorrow. So if the market does actually start the session lower, you'd expect by the end of today that you should be, you could probably open your charts at the end of the day and close the position, because it looks like we're going to have a down session, certainly up until the US session. Nothing seems to be in its way.
And my question,
Sorry,
my
Jeff,
question, George, no, you're right, mate. My question was, for your pullbacks, you like to use the EMAs. Would you use anything else, like a hard support and resistance area, trend line?
I am
just because it looks good.
Actually, it's number one is the hard levels of support and resistance, the horizontal levels. That's number one in terms of what I tick off. Then the EMA comes to confirm the direction. So I'm not trading primarily off EMAs. It's a hard level. So if we get a pullback here and we test that, and I get a decent enough reversal here, irrespective of where the EMAs are, I'll take the trade. When we start to accelerate down into a trend, and now I'm saying, okay, I'm definitely in a bear trend, not just a reversal, then the EMAs come into play. That's when but in this early reversal section, it's hard levels that are top of mind.
Nice. Yeah. All right, mate. I don't think anyone else has got any questions other than what's happening on Wednesday.
Wednesday is live trading profits. 9:30 GMT, and 45 minutes of that. And let's see what you got happening. Hopefully, there will have been a lot more clearer setups on the daily out of these channels, make it easier for the guys to jump into. But until then, if trading range sets up, if it's low, we buy, if it's high, we sell, and just manage the trades.
All right, mate. Awesome. So, guys, you can join George on this channel at 9:30 GMT, which is in 1 hour from now, on Wednesday. Thanks,
On
mate.
Wednesday. Yeah. Thank you very much, gents. We will catch up with you.
Have
Thanks,
a great
George.
week,
See you
mate.
soon, buddy.
Okay. Bye-bye.
Ash, we were talking about all of the market, really, and I think we said very much on Thursday, and we both agreed with this, that a lot was going to depend on what happened with this particular pair. Oh, sorry, this is the dollar index. And if it cleared the monthly pivot, just about everything against it would go down, including indices. And that's pretty much exactly how it's played out.
Yeah.
I wonder
Absolutely.
now, beg your pardon?
Absolutely, and the fact that we kind of got that rally in the for the dollar really after the minutes, that was sort of interesting. It was a bit of a delayed reaction from the market. We started to see the S&P and the Nasdaq come down the day after. They quite liked the minutes initially, but I think after thumbing through properly and they realized that the Fed weren't really saying anything that would be that supportive for them. That's when the sell-off came in, and that's when the buying of the dollar came in, and we've seen gold and everything else come down with it. You couple that with the fact that we've got this global slowdown, and it's plain to see now. It's not like it's just the odd number here and there. Just about countrywide, you're starting to see housing data start to weaken. I saw the Australian housing numbers looking really poor over the weekend. And same with the US, same with the UK. It's pretty clear that we are heading for recession, definitely in the UK. And yet central banks have still got this huge battle going on, and you might go from 9.3% inflation down to 8.5%, but it's still uncomfortably high, and there's no way the central banks are going to pivot just because it's come down a little bit. And as I say, Jackson Hole this week gives you live information about where the central bank is thinking, where the Federal Reserve is really where their heads at right now. But the minutes really said, you know what, we still got plenty of room to go, and they're talking about potentially the Bank of England having to go 100 basis points for their next interest rate hike, which is hugely unusual, because when they raised 50 basis points, that was a bit of an anomaly, because normally they just go 25, 25, 25 and do it nice and gently. But if they were to go 100 basis points, then it really would send some shock waves. And I think the CPI data from the UK and now Europe is suggesting that what happened in America, where we had some CPI data that was slightly better in as much that it was weakening, looks like an exception rather than the rule when you look across the board.
So I suppose based on that premise, if we are talking, gee, I wish someone would tell me how to get rid of this bloody thing. It's annoying the crap out of me. Based on that premise,
yeah,
anybody who's got the trade manager might be able to tell me how to get rid of this.
Don't you just drag it onto your screen, drag the trade manager on, and then cancel?
Really?
Yeah, if you go to your market watch, your is it
Navigator?
Yeah, go to your navigator, drag trade manager on.
Oh, and that'll pee it off. Okay.
And then if you hit cancel, drag it on again, and then when it comes on, I think you hit cancel rather than okay.
Drag it on again.
Yeah, so
right.
drag it on.
Do I really want to stop trade manager and execute? Yeah. Yes, I do.
And then cancel.
Okay. But this thing stays there.
Oh no, you wanted to hit cancel there rather than okay.
Of course I did.
Yeah.
Okay, let me try it. Let me try it again. Hang on, let me get the right button. Sorry for those of you who don't have the trade manager. You're not learning a thing here.
I mean, I'm
Trade
guessing,
manager.
to be honest, because I don't.
On. Answer
Yeah.
yes or no.
Yeah, yes is good. Stop that,
Yeah.
and then
And
cancel
cancel.
there. Yeah.
No.
Now that might be attached to a different. Is that a different? Maybe it's not their trade manager, is it? What's that? The position size calculator. Have you got something else for that?
Yeah.
It's under indicator, guys.
Ah, there you go.
Sweet.
Thanks,
Thank
Sweet.
you.
Under indicators.
Yeah, but how do you get rid of the bloody thing? I know where it is.
Oh,
It's
you didn't tell me
here.
that bit.
Indicators, right? And it's called position size calculator. I've got to drag that back on. Is
Uh,
that
uh,
is that what I've got to do?
no,
And
no,
now
no.
then
hit
hit
You
cancel.
cancel.
just click on your chart. Click on your chart, then you will reflect indicator. Yeah.
Ah,
Yep. Then click on the position size calculator and delete off. And click delete.
sweet. There's another beer I owe you, Sweet.
Well done, Sweet.
Thank you. It's been haunting. So back to my point. If all of those things are playing out, like we are going into recession pretty much worldwide, it would appear.
Yeah.
Are we going to see phase 3, or is it phase 4 of this correction crash? What am I looking at? The S&P 500 at the moment. There's a lot of
the
commentators.
S&P.
There's a lot of commentators suggesting that we haven't even begun yet this crash.
Yeah.
What's your own thoughts?
I would agree with that. I mean, I think inflation got way too hot before they started to react. And we got a pretty good earnings season just gone. But you'd start to wonder, how's earnings season going to continue to react? Is it going to hold firm as we sort of enter into the maturity of this? Does Putin move again? I mean, he was, his actions have managed to compound the situation that we've got going on, along with COVID. COVID looks like it's a bit more under control, but we're still seeing outbreaks going on in China. So inevitably, eventually, the consumer will have to say, you know what, we can't continue to pay for businesses to do what they're doing. And as we saw last week, the reason some of the earnings season's done so well is not because they're adding volume, it's because the prices have gone up, so that their margins have increased. Well, eventually that's going to stop happening. So I would agree. I think that we are in relatively early stages. We might be halfway through or something, but one thing I would say, and it's very difficult to look too far into the future, but one thing I would say is that this seems to me to still be a bear leg rally rather than a turnaround in fortunes. We've seen time and time again how the market has come down and then V-shaped recovery all the way back up again. Well, eventually that's going to stop. And every single time it's happened in the past, the V-shaped recoveries come off the back of Federal Reserve and central banks loosening monetary policy. Well, we've got a different situation this time. They're tightening monetary policy, and we've got this weakening coming in. And they seem to be sort of quite happy with the rhetoric that they're going to hold firm. So I would agree with that side. And there's always different sides of the camp, isn't there? There's the other side of the camp sort of saying, you know what, we can handle this. And that they may well end up being right, but I would have thought that even if they are right, we're still likely to see some further weakness. I mean, to go back to all-time highs, is that likely? I'm not so sure. There are certain technical patterns which say if you cross over a certain level after a bear move, then every single time the S&P has gone back to its highs, every single time.
That's right.
And we've had that now. So, you can always make either side of the argument, but I think the fundamental picture, though unclear, seems to me to be central banks continue to tighten and inflation is way out of whack. So inevitably, it would appear that the equation would equal a recession. How deep that is really probably the question more than anything else. That's really what commentators are probably arguing about. How deep do we go? If we're halfway through or just at the start, then this could go on for quite some time, quite some years. I don't know about that. I mean, it's too difficult to say, but I still think that the valuations of the market are too hot. I think we're too high. and we do eventually start to come down. If central banks do raise interest rates, then then all of a sudden you've also got an area you can put your money. You can start to put it in the bank. Whereas before we've had this Tina trade going on. That there's no other option effectively. So people were buying stocks. Now, should they be buying stocks? I think when it comes down to the top end blue chip stocks, I think you can probably start to maneuver out of those positions. And this is the reason that the NASDAQ and probably the DAX, as I say, are probably the two most bearish of the equity scenario. And the FTSE could well be the hedge against that, as you go FTSE long, potentially NASDAQ short or DAX short. But I think that is also part of the trick is picking the correct indice. But if we are going to get a choking, then it makes sense to go short on the NASDAQ. If Germany is continuing to suffer from the problems that it currently has, it makes sense to go short on the DAX. If the market cycle does manage to, if the business cycle does manage to turn, at least you've got some protection when you go long on the FTSE, because it's the most connected to the business cycle out of the ones mentioned. So there's
certainly the most resilient in recent times. There's no question about that.
Yeah, and mainly because of the way that the oil stocks have performed. But we're seeing, as I said this morning, we are seeing BP come down. The FTSE trade that we took earlier on the short side is playing out in our favour currently. Now I don't know whether that plays out fully. We'll see what happens. Still got another 30 pips before we're going to be taking profit, but it does seem that that there is some weakness today with the FTSE. And that doesn't bode well actually for the rest of the market, because it is so connected to the business cycle. If the business cycle is suggesting that the recession's coming, all those other factors that will affect the NASDAQ, i.e. the Fed raising interest rates, that doesn't look good. It's a bad look for the NASDAQ. Hey Lewis, how you doing, buddy?
Yeah, good day, mate. Yeah, look, I'm happy to sell the rallies at the moment on pretty much every indice I look at. And I'm pretty peeved that I missed silver the other day. That was a game changer bar on a strong resistance area. That one there, and completely missed it. And it happened on Sunday. On the weekend. Yeah,
poor old gold and silver. And I have the same. I'm in the camp with you now, where I just don't know if I'm going to touch it again. I mean, most of the stuff that I thought would happen with gold happened, but the timing of it was so difficult. Where things were going to go, and we did pick up silver at the lows. I don't know if anybody remembers that, but that was really to kind of clear out some other positions on gold that picked out way too high, and I found trading these precious metals difficult, really difficult, where the fundamentals in some respects just didn't line up with the actual that was going on with the charts, and we know how manipulated these markets are, but it was a joke, really. You sort of see inflation taking off, and you see potentially even the dollar weakening and whatever else, and gold was still moving to the downside, and it still looks like it might go a little bit further. When this thing turns around is anyone's guess, and for that reason I just don't know whether I can be bothered with it, quite frankly. I'm sort of with you now, that it's just a very difficult period to trade it. And I won't go as far as to say gold's difficult to trade, because I don't believe that, but I do think that right now it's become so hard to trade that, and I think even Ainsley would probably agree with this as an expert in trading gold, it's become so difficult to trade that it's better just to leave it be until it becomes a bit more simple to trade. Unless you're a bear, of course. If you're a bear, then you found the whole thing really easy.
Well, yeah, but it's hard to get that, isn't it, really, from a fundamental perspective? If the whole world's going to crap, you don't want to be short of gold. You don't want to be short of precious metal, And
exactly.
That's the real challenge that we have. I don't know, did you happen to get a look at that link that I posted to you on Thursday?
No, I haven't yet, mate. I must apologise.
Have a look at that. Don't apologise. It's really, really interesting.
I will look at it. I've actually got the only other way that I am actually playing the gold and silver market is in stocks. I have actually got some mining stocks, but because they're stocks, I'm leaving them be. You know, just gonna leave those and do their thing. I'm actually quite happy to give that money up if things, you know, don't go well. But to trade it, I found it quite difficult, and I will look at that. But if I'm completely honest, after Friday happened, I turned my stuff off and I just forgot.
Cool. No drama. I'll just keep saying at every session that we have that my preference right now is just to buy physical silver.
Yeah.
And that will give you a good reason to think about that, because potentially, well, not even potentially. I mean, there are so many people in so many places of notoriety, or I'll call them experts. I don't like to call people experts, but I'll call them experts, that are saying the world is short of silver because everyone is buying physical silver.
Yeah.
So there'd be a reason for that. And as you just said earlier, and as we agreed last month, Thursday, you know, it's such a manipulated market. And what we're looking at with gold and silver is really not indicative of the value of those precious metals. It's indicative of speculation. This is all paper money, right? This has got nothing to do with the real stuff. Yes, the spot price is what we see when we try and go and buy them, with a premium added, of course. But this is not the real deal. This really is not the real deal. This is just paper talk. Anyway, I'll continue to say that. Go and buy some. Sorry, I shouldn't advise anybody. I'm not licensed to do that. What I would say is what I'm doing is buying physical silver. So I think that's the best way to go at the moment. Anyway, let me get back to this particular chart, euro dollar, which is another great great exit. Look, I don't apologize for exiting this trade. My target was hit, simple as that. And I don't really see this going too much further, because as we approach parity again, and we're there now, we're back at parity, we will see buyers come in my humble opinion. This won't go through parity easily. It may go through it, but I think it'll come back off it fairly quickly. Now, again, what I base this on goes back to this chart, which is the dollar index. Now, the dollar index is 2, 4, 6, 7 days now into this rally. And it's going to have a little bit of a pause here, I believe. It may go through that level and give us a double top. If that's the case, happy days. Then you'll see parity with the euro bounce pretty quickly, I do believe. It may happen here, and that's why I'm out of this euro dollar short at the moment, because I don't think there's much left in it. If it goes to there, I've probably left a fair bit on the table, but I don't see it going through parity very quickly, as I say. Aussie, it's kind of a it's hard to call it a hedge on euro dollar going short, but it's a just in case it does go higher, that the dollar index, I mean, then that's why I'm leaving Aussie open at the moment, because if the dollar does go through that high, which is what, 109 or something like that, as I recall, 109.20 something. So if it does go through that level, and if you're looking for a precedent in that, you'll be looking for a long while. You've got to go back to, 2001, before that's happened previously. So I don't expect that that's going to happen easily or indeed quickly. But if we get to that level, then that's when I expect euro dollar to bounce. And I'll be looking very closely at that. That said, I think today would be an excellent opportunity to trade euro dollar long on a short-term basis, on a small time frame, because we're getting so far away from the daily pivot, and it wasn't tested on Friday, that I think there's a potential for this to actually become a trade sometime later in the day. I have a look at pound yen as tick, Lewis, no problem, and it's a very interesting chart. So how do I get to trade this long today is a great question because we've come so far. The only way I can see at the moment is if price were to break there and retest it, then it's a buy. But the target has to be probably, if not daily pivot, then that level there, because I can't see it going too far beyond that at the moment. So 100.69 or something like that. Then if it does produce a double bottom off parity, then that makes sense to trade it long on a higher low on a bigger time frame. But you're talking, probably next week before that even becomes a thing. So tough to be long on a medium to long term. Well, not so much, to be honest. Short term, I think today maybe a little bit of a rally, but then it's sell back to parity, or that low, which is lower than parity, of course. But then I'd be looking to look for that higher low to buy euro dollar. Pound yen. Let me have a look at pound yen. I had a look at that last week. In fact, it was my trade last week, wasn't it? Pound yen, I think. From memory. Yes, it was. Okay. Let me bring up that chart rather than try and do it here. Pound yen, there it is. Okay, so I think it's a bloody mess, to be honest. But prior to this week, I thought on the basis of a chart pattern or a candle pattern, which was a game changer bar or key reversal bar, which is this one, followed by an inside bar, that this would go long. That didn't happen. And currently what we're seeing is off the double top, we're seeing a lower high, which was produced off the monthly pivot. And we're potentially seeing another lower high, ugly as it is. Really, I can't call that a high. I can call it a mess. But it's doing pretty much the same thing off the monthly pivot as it did the previous month. Or is it because it hasn't rallied? And that's the thing. Every time I see a lower high or a higher low, I want to see a rally first if I'm looking for a lower high, or I want to see a dip first if I want to see a higher low. And I'm not seeing that. So to me, it's just so hard to say, okay, I've got a directional bias, because I guess longer term, you've got to look at the chart and say, well, we're getting higher highs and lows, higher high, but then we've got a double top. What do you do, really? I find this chart extremely interesting, but extremely hard to get a directional bias from. Ash, you got anything there you can add? I can't pick it.
Of the pound yen. Yeah, I mean, I was looking.
Again, it's a race to the bottom, isn't it?
A kind of. Do you know what the yen has shown, the yen has started to show just some leveling off, and the difficulty with the pound is that even though it hasn't shown leveling off economically, because the numbers in the inflation numbers are so high, there's expectation for the central banks to do something. I think the biggest problem with this one is that the expectation doesn't meet the what the central bank needs to do, and that's a problem. You know, what they need to be doing right now is supporting the economy, but there's no way they can really do that because of the situation with inflation. What I'm seeing with the yen is that their policy is probably slowed down a little. It's not in a state of flux in quite the same way, and that's what makes this a little bit trickier. You know, I would have thought that the pound yen would be pretty volatile and probably quite a good one to trade on the shorter term timeframes as well, because of that. I would probably be on the short side of it personally, because as I say, I think the yen is leveled off a little bit. I think monetary policy is leveled off a little bit. I even saw some money supply coming out of the market as well, for some yen coming out of the market for the first time in many a long month last week. So there's some maybe a little bit of a bullish sign there as well, until we get the central bank from the United Kingdom coming out and saying, okay, we're going to go. then it would seem to me that it's probably one that we should be looking to sell. And as I said, I don't think I would feel like the same about the yen currently. COT data suggests that there was a little bit of easing back on the upside with the yen, but it's still more bullish. Actually, the same with the pound from memory as well. So you might be right, mate. It might be too difficult, this one, in some respects. The COT data doesn't actually separate them particularly well. Fundamentals don't really separate them because their fundamental situation is so different, and you're almost considering different permutations with the two of them when trying to make a decision. It's not like you're kind of trying to weigh up two economies in equal number and saying, well, this one is in growth phase and this one's in weakness phase, because their inflation numbers are really what's driving it, and the inflation numbers from the UK are so hot that it does put it in a completely different realm than the yen. So tricky one, mate. I mean, as I say, I'd probably be slightly on the short side, but it didn't stand out this week. It wasn't the one that was screaming to go short on. The COT data didn't help. Because actually COT participants are quite keen on the pound.
Really?
Yeah, quite keen. Yeah, they're not too concerned about it, it seems.
Interesting. Okay. Yeah, look, I can see a non-sell zone right now. I'll put it that way. I wouldn't want to be rushing in to buy it either, I've got to say, but at this point in time, I can't see that as a sell. What I can see is this trend line down here, and I think that's probably the strongest level that I can find on the chart after we get through here. So maybe a rally up to here and find a sell from here. I kind of get that. That's the 4-hour chart. As far as the 1-hour chart is concerned, there's a level there, most definitely. So rally to there, look for an entry short. I'll go along with that. But just to go short here now, wouldn't be happy. I'm anticipating that you're already in this short, Lewis, and that's fine. I think if you stop losses above the pivots, you're probably looking okay, mate. But
I guess the other thing to consider as well, mate, is that we've been talking about the overall market weakness, and that always sort of like leans us towards the yen as well. So so that's another aspect that we probably should mention.
Well, then we go to Aussie Yen, don't we?
Yeah, very much.
And as you say, your data was suggesting short this last week. And I think I said it's hard to trust the yen, and therefore I went for Aussie dollar, and that panned out well so far. Okay, it may not, but I saw that this morning, this daily bar, and thought, okay, that looks a bit like a sell to me. That hasn't worked out just yet because we've had a bit of a rally on it, but only to that trend line, I guess. I think this is a bit sticky too, mate. Really.
The Aussie dollar.
Aussie yen.
Aussie yen, I agree with you. Which is maybe, I mean, the CAD is tricky in some respects, because of the situation with oil. I'm sure that would put a lot of people off the CAD, but I'm just going to bring it up and see what I've got to suggest why it's the Aussie really. The Aussie is, what did I see? Consumer sentiment is low, business sentiment is low. Those new home sales were atrocious. I don't know if you saw that last time out, but the new home sales were.
I didn't see it, but it makes perfect sense.
Well, negative 13%. There's a genuine slowdown going on. Negative 13%, which we haven't seen those kind of numbers for quite a while. In actual fact, so for at least a year. So there's just a little bit of drag in the Australian economy. I'm not saying it's not it's that much better in the Canadian economy, to be fair. There are some pretty poor numbers there as well, but it was, the fundamentals probably are lining up with most of this stuff, because we are getting a global slowdown. So inevitably, then you look at the Aussie and you look at the CAD as an example, as commodity-based currencies, and you say, well, a global slowdown is going to affect those two currencies. Well, yeah, sure it will, but it will also affect the euro and it will affect the pound. The yen starts to come into play a little bit more. So does the Swissy as potential suitors to kind of go and buy. But then if you bring in the COT data, then looking at the COT data, I've got Aussie weakening. It's not hyper weak, but it is weakening on the COT data. And you've got the CAD actually at its strongest net buy from speculators that we've had all year. So it really does sort of like push you towards the Aussie CAD as a potential, and the only other one that was weak on the COT data. And if you were comparing COT data, the Euro CAD is the one, because the Euro is at its weakest point throughout the year, according to speculators. And the Canadian and the COT data for CAD is at its strongest point during the year. And it might be a better trade in many respects, because at least you get some separation. You know, they both got different economies. Europe is much more kind of aligned with what's going on in China. China's seeing that little bit of weakness. The Canadian economy is much more aligned to what's going on in the United States. The United States actually holding out pretty well. So a Euro CAD for a short might be a better trade. I mean, the Aussies, are linked to what's going on in China as well, I suppose. But
I could have stayed in that trade for 2 years. It must seems that Euro CAD trade.
Yeah,
that's interesting. That's Aussie CAD. It's pretty tight on the fundamentals. You're at a support level here as well,
Yeah, I mean, it's the one that came in short, mate. It's the one that came in short.
Yep.
If you take everything into account, if you take in the fundamental picture, you take in the seasonal data, and you take in the COT data, it says go short on the Aussie and go long on the CAD.
Yep. And
and this was the problem. Sorry, mate. This was the problem with the Euro CAD.
Right.
Price. The price is just
look where you are.
How can you trade that? It's just too low. And to be fair, the heat map still churned out Aussie CAD short. But if you were using sort of like the Aussie, the Euro also as one of the weaker ones, but not the weakest, if you combine the three methods, the price should put you off. Certainly puts me off.
Same, absolutely. Not to mention, you've also got a clear double bottom sitting here on a daily chart.
Yeah, exactly, mate. I mean, this,
it'll be the same on the weekly. If you put in a higher low here, you won't be thinking short, or I won't be thinking short.
Technical picture's not good, is it?
Tough to be thinking long. Gee whiz, it is from a fundamental perspective.
Oh yeah, I mean, there's no way you go long. There's certain times where trend lines and trade lines and moving averages and pivots provide you with support and resistance levels, but there's other times that you look at them and you think, well, why would that rally? When we looked at the S&P the other day, and we were sort of saying, you know what, if it's gonna fail, it'll fail around here.
Yes.
And if you were to sort of stack up reasons that it could fail, then there were enough. Because we're always guessing, really, but you take a punt on it because you'd say, well, the picture out there could change in this particular way, and also you've got this kind of overarching mood in the market that is a little bit negative. So you get to a major resistance line, and it's worth taking a punt to go short. If you look at the Euro, I don't know how you can say that. It gets to a support line, and what's ahead of it? The only thing I suppose maybe you could make the case for is higher interest rates, but the economy is so battered that even with higher interest rates, you've got to consider that the Euro is going to rally and then collapse again within a short period, and you might be better off waiting for the rally before selling it again. But to go long, dangerous in my opinion.
It's really tough. You just can't sell the Euro at parity or below parity now. I can't anyway. It just doesn't make sense.
I don't think you can. I don't think you can. Even given the situation and the environment, I don't think you can. No. And anybody that does sell it will probably be right, but it just wouldn't. My stomach would take it.
Yeah, really, really tough. Let me go back to that pound yen H4 shift 1. Oh yeah. That's where you got in, Lewis. Okay, that makes perfectly sense. Perfect sense. Like it. Now you're looking good. Now you're looking good. And the rectangle on, or whatever currency pair we're on. I saw that rectangle. I can't remember what it was on. But anyway, I think we've kind of been around the world in 80 days. We might call it quits there. Don't forget, euro dollar is still a potential buy for the day, but short term only. And has to do a lot of work from here, I've got to say. They want to sell it like crazy. I hope they're doing the same to the Aussie. Not quite as bad. But yes, euro dollar. Now I'd want to see probably a double bottom on the 30-minute chart and a higher low before I trade it all. But if that occurs, happy days. Back to the pound versus the dollar. And no need to change this at present. This will be, where would I cancel that? Don't think I would. Don't think I would. This could easily put in a double bottom as well. So, same thing applies really. I'll leave this one until maybe even close of day. But you want to close it then. And again, you don't want any money on that, that's for sure. Any meaningful money anyway.
Mm-hmm.
Euro Cad, right. Okay, very, very quickly, Euro Cad, the rectangle. Ah, yeah, there it is. Okay, I did see it before. You could take your pick, really. These are the lows. You could use the two lows. You could use the two highs here. I think I'd like to be a bit tighter than that. Don't really have two lows there. Let's go to the extreme then. So there you go. Might be the way to go, Lewis. Yep, just trade the range. Let it hit here, give you a higher low, back up to here. I'll go along with that. I haven't got a problem with it. It does like rectangles until it breaks out, of course, as they all do. I think we're done, mate.
Cool, good stuff, buddy. All right, well, thanks as always for being my trading buddy, and thanks for the guys back in the room as well. Good to see you, Lewis. Good to see you back in. Thanks to Gary for the question earlier on. Thanks to Swee for your technical support, mate. We would have been scratching our head for a long time.
I have been for a week already.
What's that?
Oh, one thing, I have been for a week already scratching my head with that. One thing I should have said, Simon, guys, is back in the country, but poor bugger, he's just jet lagged to Billio and he couldn't come in today. I wanted to ask him a question because on the weekly Bitcoin chart, there was Bitcoin futures was the only chart I've got to look at, and I can't show you on here because I haven't got it on this platform. Massive selling bar last week, and it's a game changer bar in a downtrend. I wanted to ask him, is that relevant?
Oh, mate, do you know what? I mean, if you sort of like consider all that we need to know about the crypto market and how correlated it is to the Nasdaq. I mean, we've been saying for the whole hour that the market looked weak, and so the Nasdaq looks like a sell, and everything else looks like a sell. You don't need to know too much more to suggest what you should be doing with the likes of Bitcoin and the like at this particular stage. Currently down, looks like 20% from its highs, near 20% from its highs of the current run that it had. I just can't see it picking up. It's not ever.
Have you got that chart in front of you?
It's not a chart, mate. I've just got the price. The price of Bitcoin is 20, around about 21, and I know it got near 25, so we're down around about 20%.
Let me see if I can pull up a Bitcoin chart here. I might be able to. Just trouble, there's just trouble for speculators right now, and I think if you're short on speculating items today, I think you're going to do okay. See, look at that's not a bear flag and a game changer bar. I'm not here.
Big trouble, mate. Big trouble.
Yeah. I'm even tempted to sell it myself. I don't think I've got a broker that sells it though.
Well, I don't know, mate, but if you want my advice on dabbling in things that we know little about, stay well away.
You're right, 100%. Give myself a few slaps.
Yeah.
All right, let's get out of here. It's wine o'clock.
Yes, it is 1 o'clock. All right, thank you, and thank you to George as well. So don't forget George's show on Wednesday.
100%. And I'm not trading Bitcoin, guys. I'm tempted, though, I've got to say. Have a great week, and we'll look forward to catching up on Thursday if you can. If you can't, have a great week, and we'll join you next Monday. And thank you once again for being our trading buddies. Have a good week, mate.
You too, buddy.
Bye-bye.
Thanks to Marlon
For
too.
now.
See you soon, guys.